Hey guys, welcome back. This will be the third video, and I want to just kind of go through some of the trades that we just started the service, so there's going to be a ton of money to be made here. I'm going to go quick comments on what I'm expecting for the market next week. I would say that if we do get a blow off in the market coming into earnings in the Nasdaq and things just kind of go parabolic to the upside, it's unsustainable. I mean, 90%, I'm positive that there's no way that move can extend and continue on that path. 95%. And I hate to beat a dead horse on the SPY because the SPY is really, if you look at the SPY and we look at the momentum oscillator that we've been using as far as looking to kind of check the strength of the market, we can see that the market strength isn't really where we want to be at this price level. And you can see the McClellan oscillator on the daily 1 year for SPY. I just popped up a 2 year, but is well below, and we'll zoom in a little bit, is well below higher price points that we've seen before. Now we've really fallen off the cliff here. At least we were kind of hanging in these upper levels on the way up on the New York Stock Exchange breadth. But we never got to the peak from the initial second wave up. So really lingering there, meaning that as we come into earnings, there's some trepidation and some fear, and a lot of people are piling into the big names again, Microsoft, Amazon. We've talked about this ad nauseum. So that's not good for the market, number one. You do have a little bit of a crossover to the upside, but it's weak on the MACD, and the RSI is just it's kind of floundering here. So we know the powers in the Nasdaq. Just to step back and talk about the economy really quick, and I'm going to make this brief so we can go into some of our stock picks. I mean, think about it. For what the Fed has done, if you looked at the economy like a business, and you could say, well, look where the market's gone. If market stock price appreciation was the return on your business investment, you would say, well, look, we're doing great. Look at the return on, the QQQ, Nasdaq, all-time highs. All right, so business is great, right? The Fed's money went to work, but when you look at it in the context of a business, if you're putting on a ton of debt, and that's how you look at your business by the results of the price appreciation that we're seeing, well, there's no correlation to the amount of debt that you're putting on in the market based on the Fed. Eventually that has to come back, and the Fed either. And the Fed is, the market is not liked when the Fed has started to tighten. Every single time historically, when they've really been accommodative with liquidity and interest rates, eventually when they have to kind of pull back on that and tighten things up, the market has pulled back every time. 100% of the time, the market has pulled back. So eventually, this has to come back. You can't just continue to run your business and run your debt of your business up and up. So if you're putting everything in your business on a credit card and that debt's going through the roof, but you're making money in your business, it doesn't matter. If the debt outweighs the amount of money you're making, what's the point? And we're kind of at that point now where the Fed is, trillions of dollars of debt onto the balance sheet, and the market's responded, but you just keep painting yourself into a circle here. So we've gone parabolic. We know that nothing really matters right now except market psychology. So what are the chances that this market psychology happens now again? I mean, the virus is out there. We've kind of become a little bit desensitized to it. What could cause that trigger? Earnings are expected to be crappy. The psychology has to kind of change on its own. But what you're seeing in the Nasdaq is literally a storage of fuel tanks. I mean, I don't know what to tell you. This is literally, this move that we see in the Nasdaq, this parabolic move to the upside, is literally just fuel waiting to be ignited. I mean, think about it. From here to here, this was COVID, right? I mean, are things that much better from here to there since COVID's come out? I mean, even the companies that are doing well, right? The survivors, are they going to be a little more careful? Are they going to be, is their capital expenditures going to be as high as they were before? Heck no. They're going to be a lot more careful on what they're spending based on the economy here. Because even mom and pop economy starts to affect things in the long run. It starts to affect municipalities and governments because less businesses are open, and those businesses aren't paying franchise fees and taxes, and I mean, it's just this vicious circle. So eventually it's going to seep into the market. But right now the market doesn't care. The market is on this kind of inverse psychology based on fear and greed. And right now we're in full-blown greed mode. But the biggest, make no mistake, the biggest gains or losses in the market come at the exact transition that fear turns to greed or greed turns to fear. And we saw that right here. This was some greed and complacency. And then COVID came out, this virus, and then wham. And I don't think this is really showing the true extent of the trajectory of this move that we see here. This is a V recovery, no doubt, and then some on the Qs. I mean, the Nasdaq's or the S&P is still lingering below the gap. We just filled the gap, but this is a move that is unsustainable. And the reason I picked Wednesday is if we switch to Heikin-Ashi candles, they extrapolate volume data based on the prior candle and give a bit of a clearer picture on wave cycle lengths and stuff like that. And we've never had a 10-day green without a pullback. So this move here is very similar to this move. Nice leg, 3-day pullback, and then a fire up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. And right now we're on day 8, hence the Wednesday pullback would be historically in line with what we've seen before. The little line I drew here is some back and forth consolidation before we broke this triple top line. And it's easier to see when I do the bar charts. But the idea is this is unsustainable, and I'll stick by that 100% that we're going to have a pullback. And I think it happens Wednesday. Now, if we don't, and I'm wrong, which I've been pretty accurate so far, but I'm not perfect, it would be a blow off, and eventually that move would come undone just even more than we would have from the extension that we currently have. And you'd obviously pull back at least up to a break even if you shorted the market. I'm not saying go out and do it. I'm doing what I'm doing. I'm just telling you that if you are long the market, I've had friends that I do recommendations for. They don't really manage their money, but they make their management decisions based on some of the things that I tell them. And they've been scaling out of this market. I told them it's very hard to pick a top in a market, but I would suggest that you scale out 10% at a time until you're at a comfortable level, whether it's 60% in equities or 40 or 30, and I let them decide that based on when they need their money, how long they're looking for retirement, different age groups and whatnot. But for a lot of them that have made a huge amount of money that were scared to death in here, and I told them don't sell yet, let's see what's going on. And then we started to move back up, and then at this point in here I'm saying, okay, let's lighten up a little bit, let's not go crazy because this could be a blow off, it's a little bit of a bubble, and let's start to scale out and then scale out a little bit more. I mean, that's how you manage your money like a business. You don't just make rash decisions at some point and say, let's just dump everything. Was this move expected? No. In fact, the people that are making the most money right now are your YOLO, crazy traders that are out there that you see on Wall Street Bets that are, taking $20,000 accounts and using leveraged options and going from, 20,000 to 500,000 back down to, zero. Hopefully some of them are keeping those gains, but your experts are not making money in this market. At some point they started to jump on board, but most of your money managers were completely shocked by this move and were probably telling you to lighten up or sell down in here, and then that this was a bear trap, a bull trap, and then all the way along the line. Why have you seen Warren Buffett only make one purchase, and it was based on an energy play that he made? Hasn't really said Pete, because this market has completely confounded the best traders and the best money managers in the business. So most of your people that are making money are your retail investors that know absolutely nothing about the market, and it's just blind luck. And those are the guys who can get burned on the way back down. But when you see this move and you've been thinking about shorting in here and here and you've been burned the whole way along, you start to think that, wow, maybe this will last forever. Maybe it will last forever. And the only scenario that I could see that happening is that if there's a complete disconnect where the market becomes its own living, breathing entity. We talked about this like 5 years ago, where nothing is based on valuation, right? And I'm kind of thinking that may be potential, but I do still think that based on just the sheer human psychology of fear and greed, that at some point this extension starts to kind of feed on itself, and even to blow off to the upside, that those traders will start to exit to lock in gains, and that may cause a windfall pullback to the downside. In fact, it could even, who knows, we could line up somewhere along a longer term, more sideways move in the Nasdaq that looks a little bit more reasonable, that's kind of parallel to this line, if we get up to like 266, 268, 269. But like I said, Wednesday is the day I'm looking for. Enough said on that. I don't think this is sustainable. I do think that certain aspects of the market are a complete bubble, and we've been disconnected forever. When you see moves like Tesla, stocks that are up 300-400% in just a matter of months, 200%, 300, whatever it is, that's very concerning. So AMCX, we talked about that. I posted a message on that. I think we were at like 23 and change. We're hitting the 20-day moving average on a buyout rumor. We don't like to buy stuff on buyout rumor, but I don't know. This looks reasonable. I mean, if it was a buyout rumor up here, am I buying it? No. Here, no. But now we're starting to get, we're down in the trough, man. So am I opposed to buying and holding? I had 1,300 shares of this, and I lightened up a little bit. Absolutely not. I still think we continue to hold that. BLCT is our new IPO, and we've seen crazy moves in IPOs, right, guys? We're not here to like, wow, Henry, and I bought it at 23, and there's other stuff that's gone from 23 to 40, and you got me holding this thing up $1 and change. I'm not really impressed. Well, in order to get into the stock and before the parabolic moves happen, you have to buy at some level. Now, looking at the chart on the 3-day pattern that we've seen, there's only been trading for 3 days. These are after hours, obviously in the gray, and I could probably even remove the. Let's do just 20-minute charts. So this parabolic move that we saw was on very little volume when it opened up at 20 and shot to 35. I like the price history, right? But the volume on the way down was a lot heavier. So they let it go, and then the sellers came in. Guys that own this thing at 15, 16 bucks, what the IPO offering was for those investors that got in on the initial public offering, were selling the hell out of it. And then at some point, the people that wanted to get in it started to support it, right? And then you see a little thin trading in after hours. Oh, this might be, it's starting to move up from 24. I don't want to miss this if it goes back up to 35. And then what happened again in the morning? Big selling, right? Still some sellers lingering that maybe not have got out the high there that kind of thought, oh, maybe this can curl back up like me. Boom, selling again in the morning. And now we're starting to kind of drift a little bit lower. And now we're back to that little point where like the people that weren't in it looking for this thing to be a longer term buy like myself are starting to get in again, support it. And big volume right off the bat in the morning, high price point, can't return back up there. So if at some point we're looking for that equilibrium, right? And what we want to see is the sellers start to dry up and the buyers start to come in and push it back above. And 27 is obviously our key trigger area around the 27.50 area. Along in here, obviously 28 would be, I think the opening high, was 28 on Thursday. That's the number we want to get over. You don't want to see it get over there and buy into it and have it pull back again. You want to see it get over there and go to 28.5, 28.7, 28, 29, 30. Those are the numbers that we're looking for. Closing 30-minute candles above there. That's the stuff we're looking for. And we've seen it before. We've seen it in so many other IPOs that did not look fantastic on their first few trading days because nobody really knew. And they just took off from there. And I think ARI or API was one of them. There's a bunch of them. I don't know why I put that up there, but API I think was one of them. Agora Pharmaceuticals, and this has a further back price history, so we'll look at this one just as an example to kind of show you that, don't lose faith. This one, very similar price pattern, right? Open, shot way up, and then traded off, and then actually went back and made a lower low than the initial day where it went up to 56. So 55 and change, got down to 42. And then what does it do from there? Just starts grinding higher and makes a new high at 68. So let's not get a little bit too concerned about BLCT, just kind of lingering at the bottom. Same thing, IVA. There was 5 IPOs that opened on Friday. I had no interest in any of them per se. QH was kind of interesting. High risk, high reward. But IVA was the one that I picked. And IVA is the one I'm sticking with based on fundamentals. So let me do that part. And, like I always say, small size. I had a couple guys buy into it on the text alert in the 12s, low 13s. They're like, man, I could have sold at 14.50. Maybe some of them did. But, a couple of them asked me, hey, it's down back to where I bought it at. Hold it over the weekend. We want to go small on these. And then once direction is obviously perceivable and we start to break above 15, 16, to the all-time highs, maybe it's going to make it around at 25, then we can kind of add a little bit, scale in, right? But I like that it's close to the initial public offering price, and I like the company. And who knows, when we look at something like Weemy, which was an IPO as well that lingered forever around $3 and then went parabolic on Friday to 23, I think, or more in after hours. This is what we want, right? So we want to find the cool, interesting, fundamental companies that have good fundamentals, good, solid investor support, and those are the ones that we want to get into before the big move. So if we're sitting around and it's $10, $11, and you're like, Henry, it's not even moving, we could have said that about this. Henry, you got me in this at $3 and it's been sitting there for forever doing nothing at $3. I wasted my time and money. I could be putting that in something else. And next thing you know, you're at $23. And I think this might actually have legs. I did another video on that I really felt bad for not alerting you guys on that one that I was trading. But honestly, I didn't see the move coming. In fact, left a lot of money on the table. So QH was the other one too, the IPO, kind of curling here. Look at this thing. Opens up, 15 IPO price. I forget, was like around 9 or so. I can't remember. Maybe it was a little bit higher than that, 11 or 12. Rockets up to 22, and then sellers come in hard, right? Same thing. Now we try to find that equilibrium. Kind of an interesting company. I wasn't super. I don't know. This one was a little bit lukewarm for me, and I was a little bit concerned. But the price I was making it more interesting. I was worried that, I had no interest in it at 22, 23. Now I'm kind of interested in it, so I might actually take a small little position in this, just to kind of add to my broad portfolio of these IPOs that I think are interesting. And this one definitely is interesting. It's just high risk, high reward. They're in the service industry, ride sharing, which is kind of cool in China. And then the last one we talked about was SHLL. We said that I think that has a reversal intraday. I told you guys that this looks like an interesting reversal. Excuse me, that's actually showing today, and that's not what we want to look at. And then we saw the move. It had a nice trade from 26s and then up to 28.25, where it made a double top on the daily and then sold back off, making a new low for the day. Still kind of think this isn't completely done yet, but the sellers definitely didn't want to hold this. This has had quite a move, and it's literally trying to figure out what it wants to do right here. So important day on Monday for this. A close below 26.30 would probably roll it back down to the 23 or 24 area, where it try to find some support before it legs up again. But interesting company, these electric, I think Workhorse and Solo, and these still have some legs to go. Even Neo, they just, like I said the other day, they just got overdone to the upside and need a little pullback time. And I'm going to close with one more stock that a couple guys were asking me about. They were kind of themed in with Weemy. Look at this thing, made a new high, but then pulled back to kind of close a little bit lower. This one looks the strongest, Neo, out of all of them. But God, it's hard to buy a stock that's at $15 when it was at $1 a few months ago, late last year. So MYSZ was the only stock that we could find publicly traded that has a holographic component to it that kind of mirrors Weemy, but they're completely separate businesses. And someone asked me to look at this. A few people have asked me to look at it on StockTwits, and I looked at the fundamentals of the company at zero interest. But looking at the chart on this, I'm not completely opposed to buying a position in this but I'm going to look for a volume change. So I'll come out with those numbers tomorrow morning. We don't want to just sit here lingering. It looks like there's no interest right now, and I don't want to just sit with dead money. This isn't like an IPO where we're waiting for someone to come in and run it to the upside. The company loses money. Is the chart interesting here? Not really, not yet. It's more interesting than it was up here. I do kind of like stocks. I like stocks that kind of have these little bases before they pop. I don't like this kind of action here. I don't want to chase this kind of action. So I do like these little baselines. So I will be looking for a move in this, and maybe we're going to look for a volume move. Maybe we'll have a price trigger to the upside. I'll figure those numbers out for Monday morning. But I guess we'll put it on the radar because maybe people will start looking for stocks that are similar to Weemy, just like we saw on U1 with Beasley Broadcasting, and there was other sympathy plays when those different things. It's always a theme, right? COVID, biotech, whatever. Something's going on, and now maybe Weemy starts the holographic, whatever the specifics for the company theme, and we'll have to find stocks in that theme. And there weren't too many public companies traded in that genre that I don't know if that's a good that category. So we're gonna go over some more stuff next week. I'm sure there's more IPOs open. The stuff that I'm looking at the Nasdaq, I'll be firing off intraday if I think we're going to roll over and sell off. I mean, I can't imagine this isn't buy the rumor, sell the news, and the earnings for the Nasdaq. And if we go any further to the upside, the pullback's going to be more significant and more severe. So that's my take, and I'm sticking to it.